he's been in the insurance business for 22 years, but specifically doing what he's doing since the burst of the dot-com bubble in 2000 when he lost his retirement money and started looking for a better solution. And so I said to myself, what does an insurance machine like this, what does he eat for breakfast? And found out that he doesn't really eat breakfast very often, ladies and gentlemen. Yeah. When he does, he usually eats it for dinner. So my conclusion is that an insurance machine just eats everybody for dinner. Very talkative gentleman, as we all know, and his wife is very talkative as well. In fact, she let me know that even though he always tells her that she's the more talkative one, he actually has plenty of pen pals in London, from friends they've met in the Mediterranean. And when he does eat breakfast, he likes to go to a place called Papa Z's. And because Crystal's saying, I've got to do a little cheer or something. Right? Okay, so this is from my years back at Newport Harbor High School. Cheer. Okay, here we go. Oh, wow. Excuse me. Oh, wow. R-O-N-B-U-B-U-D-D. Run, bud. Let's go.
Yeah, pass this out. I'm sure Don has never been introduced by singing, and I am absolutely certain I have never been introduced by cheers. So I'm pretty psyched about that. How about you, John? Yeah. Okay. Very cool. New standard. New standards. Exactly. Now you guys all know what you have to do. As Marissa said, I started my business and got into the insurance business 22 years ago, but about 13 years ago, through what I thought was conventional wisdom and our retirement money, I got into variable products, the market, and when the market crashed in 2000, 2001, we lost most of it. At that time, I said, you know, they're just, and I had a lot of clients, a pretty large client base, who constantly asked, you know, what can we do? There's just a great deal of confusion out there, but also there's a lot of risk, and my experience is usually the people that are in the know with a great deal of money are pretty well insulated and do pretty good. And then the rest of us usually you know, struggle. In the market, as an example, there are on an average of 2 significant crashes, some more than others, every decade. So we should not be surprised at the volatility of business in the markets. Our fiscal cliff is a little surprising. That's kind of charting new territory and very scary. We are operating we're bringing in a significant deficit to our economy. Right now, we're operating about $1.2, $1.3 trillion negative a year. I don't know how they're going to turn that around. The debt is going to, you know, we're going to see the ramifications of that in years to come. The biggest problem we have, in my opinion, is that, you know, everybody's always expecting the markets to bounce back, and they always do, and they will. The problem, though, is we're kind of swimming in new waters, and economically as a country. And you know, I heard it said just yesterday from somebody in the industry that we ought to be flying our flag upside down. What does that mean? Distress. It means your country's in distress. Whatever your flag represents, it means you're in distress, the boat, whatever the case may be. Our economy's in distress, not just ours, but a lot of others as well. Nonetheless, you have to protect, as Don said, with the insurance, the proper insurances, to protect your assets, you have to be very wise. The number one thing you want to protect, in my opinion, is your health. One of the other biggest things you want to protect is your money. We're all here in a business setting making money, hopefully, with the idea that most of us are pretty strong entrepreneurs, so we're actually wanting to make money for ourselves, as opposed to just working for someone else and building someone else's dream. Part of that dream is your retirement. What are you doing for your retirement? And the number one thing in retirement, I promise you, is not accumulation. It's not just growth for growth's sake. It's income. I've been saying this to you guys forever. The number one thing you need to solve if you want to retire well, or just retire even at a level that you would find satisfactory, is income. And I'm not talking about the kind of income that you're draining your assets on like most of our parents have done. I'm talking about the kind of income that, like a pension plan, like a firefighter would have when he gets 70% of his income for the rest of his life, and then all he has to worry about is the other 30%. The problem is, I'm reasonably certain most of us here don't have a pension and never will have one. So we have to create our own personal pension. And so what I've done is I've taken the last sheet of an illustration of a client I'm currently helping. These are actual numbers. And if you have it, or if you don't have one or you want to share, what we're looking at is a 60-year-old with $200,000 that she wants to roll and into creating income. She's going to ladder her income. She's got some other income starting at 65. This particular money she's going to actually let ride until 70. This money in this particular product has a guaranteed 10% bonus with a 6.5% growth. So after year one, this income vehicle is worth a value of $234,000. That reflects the 10%, the $20,000 bonus, plus 6.5% growth. You can do the math. That is to the penny. If she were to take income off it immediately, she would get $10,000 of income, $10,543 of income for the rest of her life. That's 5% of that money. What are CDs paying today?
2.9.
That's 5%. That's guaranteed for the rest of her life. However, she doesn't want to do that because this product will grow 6.5% every single year. What I think she's going to do is wait until she gets 70. Her $200,000 is now in this income value worth $412,970. That's a good deal. It will income out, guaranteed, if she takes it at the age of 70, $22,713.36, 36 to the penny, guaranteed. That's a 6% payout, 5.5% payout, guaranteed. No, 6% in this particular product. So,
for the rest of her life.
Yeah, for the rest of her life. Okay, so the beauty of it is, products that came before this never paid out like this, but you had to trade your money forever for that income, which is still not a bad deal if you live to a ripe old age. However, if she died a year later, because as a friend of mine says, she becomes the front end of a Mack truck, not her fault. The family needs Don Sharda. Listen, I'm thematic. I'm being thematic here.
So sensitive.
That's my friend, not me. Okay. This is the kind of friends I run with. Okay, whatever. The amount of money in there would still be in there. That money would go to her heirs. So this is the ultimate product. This is the most popular product in the country right now, by far and away. For the baby boomers and the people who are already retired. Today we have 10,000 people, baby boomers, retiring a day, every single day. Do you think that's going to have an impact on Social Security? Okay? So when you're piecing your income portfolio, and by the way, this is somebody who had $200,000 to do this with. Okay? If you're 40, there are a number of great products out there that you could just put away your IRA money, your $5,000, $6,000 a year in. Okay, fabulous products. They're not sexy. They will get results, though, and that's all we want is results. The problem we have in America today is we're not getting results. We're getting promises, but not results. 70% of the people are retiring today with less than $50,000. 70%. That means whatever is being sold is not working, or whatever we're buying is not working. It's one or the other or both. I mean, you know, you cannot escape the facts. People do not retire well. And it's not because they didn't make money. It's because they didn't grow their money safely and have it pay out with income they can count on. Now, I'm hoping that we here in this room will still be able to collect a Social Security check. I'm not hopeful at all that my children will, because I think this generation is going to be a burden to the next and the next several. Okay, just sheer numbers. We're twice as the baby boomer generation I'm talking about. We're twice as large as the generations. Thank you. As the generations that follow. So, anyways, like I said, this is a national client. It's a very specific situation that a client needed. I can help you. I really can. I just need to take a look at what some of the things you're doing. I don't have to try and look at everything personal. I just need to know what you're doing so I can help you, whether it be a long-term plan or a very short-term thing, something that you want to income out in a year from now. Any quick questions? I know I'm out of time.
What kind of mix is in this product to give 6% a year?
This is guaranteed. This particular one's guaranteed by American Equity in their portfolio. So your money is not actually going in the market. Your money's going into American Equity's portfolio, their own personal portfolio. They're a $18 trillion company, A+ rated, cash reserves like you cannot believe. So basically, you're banking on their guarantees that they're going to stay in business and stay in, be able to pay these out. The companies that we deal with, almost all of them are over 100 years old with trillions of dollars. They own the world. Allianz, Ing, American Equity, North American, they own the world. So that's what you're banking on. No fail-safe, Jesus come home tomorrow. There's nothing that's absolutely fail-safe, but I can say if you want to put your money somewhere, you might as well put it with the people who've been through the Great Depression, who've been through the Vietnam War, who've been through World War II, and who know how to make money. Yeah. Yeah, there are minimums and maximums. The maximum is $1 million, and then after that, they'll take more, but on a review basis. The minimums for products like this generally are $10,000. Some of them are $5,000. Yeah. Well, this particular product has an age requirement in terms of this particular income rider, but there's no age requirements for the type of products that I typically sell. I can put your money in the market. I just don't feel good about it for safe retirement money. If it's risk money and other things, different story.
Can you roll an IRA in that product?
Yeah, this is really, this is both for IRAs, qualified money or non-qualified, doesn't matter, but really most of the money that's going into these products are IRA money. Yeah. Any other questions? All right, thank you.